Yep. All right, let's get it. Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
Hey, everybody. Welcome to a very, very special episode. This is what I like to call an emergency episode. We will see what sort of developments happen in the market over the next few weeks if we're going to have more of me posting emojis in our social media for these types of episodes. But thank you, everyone, so much for the people who are on their live stream right now in sort of like the amateur investors fashion. I think we maybe kick it off with some definitions, some level setting about the situation. Chris, I see you smirking, so maybe you have something else in mind. But how's that sound to you? I mean, we're jumping right into it. So
yeah,
we're going to go through some really complex topics. So thanks for watching. Let's make it happen.
Yeah, so I guess we'll jump right into it. So this week we saw a company called GameStop, as many people have heard. It's a company that sells video game equipment, whether it's consoles, games, and as such, their stock shot up from anywhere. It started at like $4 a week ago.
I think it was $257. I think $257 was the 52-week rolling low.
Yeah, and that's not $252. It was $2.50, and it shot all the way up to, I guess its peak was somewhere in the 400s.
Yeah, 460. I got out at 458, but the fight continues.
Yeah, so we saw the stock shoot up. And basically, the way that this happened was that Wall Street Bets is a Reddit page, and basically they're a retail investor. Retail investor is just like you and me. We're not a hedge fund. We're not a private equity firm. We're not a company. It's basically just, a lay person. And they saw that the stock was shorted 136%, I believe, which means that they were betting that the stock would go down. So I actually have a nice PowerPoint. So for those of you that are listening on audio, you're going to miss out and you're going to have to look on YouTube. But I made this nice little PowerPoint that I'm going to share right now. Can you see it, Ben?
Oh, Chris, I'm excited. I can see it, yeah.
All right. Does it look good on? Yeah, this looks good. All right. So
I'm going to see if I can make it a little bit smaller for folks on the Twitch here.
All right.
I think that's good. I think that's okay. If people think
sweet.
Otherwise, let us know.
So this is shorting and what a short squeeze is. So basically, shorting is, here's a perfect example. So it's me and Ben, and I'm like, hey, Ben, can I borrow your GameStop stock for $5? And Ben's like, yeah, you know what, Chris, you're a good friend. Yeah, I'll let you borrow it. So I give Ben $5, and he gives me the stock. He's like, but I'm going to want that back in 6 months. So going forward, I sell the stock immediately to our good friend, Senator Sanders over there for $5. So Senator Sanders gives me $5. Sanders now has the stock. I have $5, and Ben is still owed one GameStop stock. In the event that the stock goes down, like I was predicting, it goes down to $1. I have my $5 cash, and Ben is still owed the one stock of GameStop. Still owed one GameStop stock.
This is a tongue twister.
Yeah, it is. So I now buy the stock at $1. So I have $4 cash from the $5 that I had originally and the one of GameStop stock, or the one stock. I'll just do it like that. And then I'm going to then give Ben the stock at $1, and I have the $4 cash profit. Normally, when you're doing something like shorting, it's not ideally or not $4. They do take the brokerages take a small cut for doing this, so it won't be exactly $4, but to keep it simple, we'll say that that's what it is.
Yeah, there's a lot of fees. There's no need to go into that just yet. There's
no need to go into it, but for this sake, we're going to say it went. I got $4 profit. So in the event that the reverse happens, it goes to $50. So now Senator Sanders has a stock at $50, and I still need to buy it at that $50 rate because Ben wants to sell his stock that is owed to him. So that is called getting short squeezed. I'd be getting short squeezed because Ben sees that it went from $5 all the way up to $50, or what is that, 1,000% return. So Ben's like, okay, I want to sell my position now, but he doesn't have the stock right now. It is out there. He is owed it, but I am forced by my brokerage or whatever the order of which they came in I get short squeezed out of it. It's also to cover my losses because now I have to buy the stock at $50. So I had $5 profit. I now have to buy it at $50. So I lose 45 in cash, and then I have to give Ben the stock. So minus
Thank you,
$45 cash. So in theory, this does, $45, okay, it's money. It'd be annoying. I'd be frustrated. But where it starts to get really interesting is with options. So options, as Ben and I have alluded to before in previous episodes, it's a contract to buy 100 shares. So when you're obliged to buy 100 shares, imagine multiplying my $45 loss by 100. So that's 4,500. But then when you're doing it, so I'm only getting lucky if I have to sell it at $50. GameStop's stock shot all the way up to $400. So if I was getting hit and having to take my loss at $400, that's what, $400,000 right there? Is that correct? Or $40,000?
I won't check your math. I wasn't listening.
400 numbers. I think it's $40,000. So think of the magnitude of that if hedge funds who have quite literally billions of dollars short stocks with like thousands upon thousands of contracts or hundreds upon hundreds of contracts, that number can get very large very quick. And that's exactly what happened when Wall Street Bets was a guy that figured out that the hedge funds were shorting it.
Well, 4 million users in the Reddit.
Yeah, there's 4 million users in the Reddit. He figured it out and was kind of saying like, this is what we're going to do. They kind of collabed in an open space, and that's what they ended up doing to hedge funds. So they saw that it was oversold at 136%, basically like way over leveraged. That should have never happened. So they were squeezing out hedge funds. So basically it was the retail investors or amateur investors, as we may call them, that were basically bullying the hedge funds. So this is, or I'll just say, so if you buy a stock, normally the max loss you can take, if I bought it at $5, the max loss I can get is $5 if it goes bankrupt.
And that's going long. I think that's something to really clarify here. Like if you're going to talk about a normal, I mean, you can definitely have debt or margin when you're doing a long position, but I think the normal trade that you go into your brokerage, that long position, the max loss is 100%.
Yep. So yeah, that's called going long or buying a stock or just a normal purchase of a stock. I put $5 in, the company goes bankrupt, I lose my money. But the reverse for the short is technically your losses are infinite because you can exponentially, the stock could have gone to 1 million for all you could care, or 2 million or 3 million. I know that's a little absorbent or exaggerated, but that's what could happen. So that's pretty much that. That's what I wanted to share. I hope you guys liked my slideshow.
I like that a lot, Chris. And just for disclaimer, I didn't even know that was going to happen. So I thought I was done with PowerPoints for the day. But this is one I actually like. Yeah. So Chris, I thought that was a really great explanation. I think the key takeaway is, what is a short trade? It's these hedge funds. And I really want to go in. I think we're going to go into sort of an opinionated section. I want to just yell at Wall Street for a minute, because I think there's going to be some venting for a moment. The really big concept to really wrap our heads around is that the 136% of the shares float, meaning that the hedge funds, because they have sort of unlimited capital access that they can get to, they have their hedge fund buddies that'll, buoy them another $5 billion to go sell stocks they don't own. That's the key thing here. I mean, these vehicles exist. Shorting the market, fine. Everyone knows that those rules exist. You know that there's risks. The issue that has now been taking place is that so the issue is not that hedge funds are going out of business, they're taking losses. They know damn well that when they take a short position, they're playing with house money. At the end of the day, like Chris said, the losses are infinite, and the hedge funds who got their MBAs, what have you, worked on Wall Street for years, they know the risks. But the real risk is for the retail investor at this point, where you have these, investing for everyone applications like Robinhood or Charles Schwab, or honestly, I think TD Ameritrade as well, that are freezing the trades of specific stock. That to me is a violation of the First Amendment, where you have these open, what you'll claim free and open markets where you can go and trade, buy and sell the stock. it only becomes illegal from the SEC's perspective or from these hedge funds or from these brokerages. It only becomes illegal when real investors, you and me, are upfronting our own capital to buy the stock with real money. But what's not an issue is when the hedge funds invest with money that literally doesn't exist. And to Chris's point, why GameStop was able to sort of exponentiate even further is that, one, the hedge funds have to cover loss. The losses are infinite theoretically, but it's only as infinite as the growth of the stock, which is, I guess, theoretically infinite if we assume an infinite source of capital. There's not. On the Reddit side, we're going to call it the Reddit side of the investment play, is what's happening is when the Redditors and me with my $50 go and take out a call option, like Chris had mentioned, the contract to underwrite a position in the stock with the right to buy 100 shares at X price. What happens is the brokerage that facilitates that trade now has to go outright buy 100 shares to cover that position for their investor as collateral.
Mm-hmm.
So not only the hedge funds buying in mass their position to cover themselves, the brokerages are now covering to prevent or to establish collateral for their own investors. So you've got this duality that sort of amplifies the trade velocity, and that's why you're seeing the GameStop one. It's a small market cap, so it's pretty easy to move the price with only a little bit of trades. But with it becoming the most traded stock on the market in the United States, I think that was yesterday, above Tesla, above Amazon, above Apple, above Microsoft, you can move $100 million company pretty fast when you have 400 million shares moving around.
And they broke $10 billion, which they had never done historically previously in the company's history. And this is a company that was being shorted, obviously. So that's another thing with a company being shorted like that, the price is actually being driven down. So yeah, you could also say that the hedge funds were doing the disservice to GameStop. Like, yeah, you can do it to any company. Yeah, like you can call it bullying, whatever. Fine. If you're calling it free and open markets, but this is kind of where Ben and I were getting furious, because basically hedge funds were claiming like, oh, like it's free and open markets, if you want to get involved, like that's okay. But basically they were beaten in their own game, and then they changed the rules. So today Robinhood disbarred or disallowed buying of stocks, whether it was GameStop was one of them, AMC movie theaters was one of them, BlackBerry was one of them, Nokia was one of them. So all these companies that, a lot of us know, 10, 20 years ago were probably doing quite well. And then due to technology and upgrades, these companies have kind of fallen behind. So Wall Street saw that these companies were like good shorts, that like, oh, we're going to make a quick buck by shorting these into the ground. And when they go bankrupt, we're going to be the first to collect collateral against it. But so what Robinhood did is, like, well, it's illegal. There's literally a class action lawsuit against them filed by a Manhattan district attorney, or it was basically filed today. But basically what they did is they prevented people from buying the stock. So they're like, you can hold your position or sell it. But what basically went down in the background, or at least what I'm inferring happened, obviously I wasn't there for when it went down, but Melvin Capital was the one that they were a hedge fund with $12 billion. Basically, they took a loss on the GameStop alone, the GameStop short, of 2.8 billion, 2.7 billion, some absurd amount of money.
That's what they disclosed.
That's what they disclosed. Citadel Capital ends up coming in and giving them a loan. So basically they gave them a loan for 2.8 or 2.9 billion dollars. So what they
five. It's not five. I thought it was five.
Maybe I was wrong. So they gave a large loan.
I don't trust anything.
So, but also ironically, Citadel Capital owns 40% of private equity in Robinhood. Obviously, Robinhood's not a publicly traded company, but there are owners of the company. So then,
and their biggest customer.
They're their biggest customer. And yeah, they're also the one that does banking with them. So then, in theory, Citadel Bank went to Robinhood and said, you're not going to allow people to buy these stocks, and the ones that they were getting screwed out of, while also telling Melvin Capital, with the money that they loaned, to put on a short against them. There's no way I can prove this, but it's just a little too convenient. Warren Buffett, one of my favorite quotes that either him or Charlie Munger said was, you show me the incentives and I will show you the behavior. I guarantee, I can't say a guarantee, not in the court of law, whatever. But isn't it really funny that the company that's the main brokerage and has a huge equity share in Robinhood gives this loan? They're really incentivized to get their money back by telling Melvin Capital to probably short a stock that's going to go down. Because if no one can buy the stock except for the ones that are currently being held by retail investors, which they can't even buy on the Robinhood app, the price can only go one direction, and that's down, because you can either hold the stock or it's going to be sold. And, if everyone holds, it would have stayed the same, but that's not, like, in a market economy, you're like, oh crap, like, it's going to go down. So then people were, basically getting forced out of their position because they can't do anything. It takes time. If you want to transfer your stocks from a Robinhood brokerage to another brokerage, it takes 5 to 7 days. So it's just absolutely ridiculous.
Yeah.
It's borderline illegal. I think the CEOs and they're also the founders of Robinhood should step down. I think, Citadel Capital, the hedge fund manager, should go to jail. And I also think that Melvin Capital potentially should go to jail for this, on top of the fines that they're going to see. Sorry for my rant there, Ben.
No, it's a good rant. I'm with you. And I think and Levon, I definitely want to answer your question, because it is a good question to see, like, where do the lines start and stop in the legality in this situation. I think that's really what I want to dive in for a little bit about, is to understand and to sort of like convey my perspectives on what is fundamentally flawed and what's going on here. So not only is there a tremendous public display of market manipulation, but there's also sort of this backroom dealings of like the success and the influence of the lobbying capabilities of these hedge funds and the network that they've established for themselves internally. So, I mean, these hedge funds that are floating each other the billions of dollars in the form of loans, they're not friends. They're not doing this as a favor. This is, I'm going to protect my ass. I'm going to save Melvin Capital today. They might have lost 100% on probably the worst trade of their entire existence. But instead of them accepting their losses, cutting their losses early, recognizing that, one, this is a momentum trade that's happening right now. GameStop, AMC, these are 5, 10 companies in a global market of hundreds of thousands of companies.
Thousands of companies, quite literally thousands.
If not more, if you include penny stocks and sort of these over-the-counter trades. I mean, there's just hundreds of thousands of companies. They are honing in on a momentum strategy that hedge funds, institutional investors implement every single day, every single second, in the form of algorithmic trading. These brokerage houses play momentum. They look for chart trends. They look for breaks in whether they're looking at the MACD. We were even talking about this with Sylvia in our last episode, the moving average convergence, divergence, looking at key indicators in the charting, and these algorithms basically just like programmatic executions of trades. They do this all the time. They can bid up and down stocks all the time. What is so frustrating to see is that these retail investors had a fully public disclosure of their trade strategy, which I don't know about you, Chris, but I have no idea how Melvin Capital implements their trades, nor how they execute it, at what price, whatever. Doesn't matter. Goldman Sachs doesn't tell me when they're buying stocks. You can log into Reddit. Melvin Capital can log into Reddit and take a look. Hey, Reddit is buying GameStop. Maybe I should sell my position if there's 4 million Reddit users in this forum. But instead, there is a dangerous precedent that is infringing upon free market dynamics that I think have never really existed, right?
Also, to expand on what you said, sorry to cut you off there, Ben.
That's fine.
On top of that, the Reddit group was conveniently, shut down for a couple hours. It's now back up and running. Their Twitter account never got touched, luckily, so they're able to keep talking on that. What else went down? There was something else that they were in. Their Discord channel. Their Discord server got taken down. So they ended up moving to Telegram, which is a privatized chat. They're still a company, but it's a more secure chat. And they're also tweeting a lot.
That's a controversial app as well. So we don't have an opinion on that. I think honestly, there's just scary things going on right now. And I don't know how this is going to play out. Levon, to your point about like the potential legal issues with folks who are sort of like tweeting and moving markets like Elon Musk, I don't think that there's a risk for some of these people that are moving the stock that are influencing this trade specifically. My reason being is that I don't think he has a controlling ownership stake in GameStop.
Yeah,
If he was tweeting about
he ran into trouble when he was tweeting about Tesla stock, when he was like saying, when he was tweeting like, oh, the price is 270, that's too high. Since he has controlling ownership of the company, you run into issues because that's considered basically
it's
like
insider trading.
Insider trading, exactly.
Yeah.
So that's not allowed. But unless I don't even think, even if he were to have shares of it, as long as he doesn't have more than, I believe, 10% is considered.
It's 10%. Yeah, that's where you need to have a disclosure of ownership.
10% of all the outstanding shares from that company, he doesn't have to have disclosure. Elon Musk could, well, with his net worth, could quite easily, if he wanted to, have 10%, but I don't think it's.
He could own the whole thing. It's $12 billion. I mean, that's at the peak. I think 460 brings it up to $12 billion. So yeah, I don't think he has controlling ownership. He barely even owns Bitcoin, and that's surprising to me.
Yeah. So I mean, it's just it's crazy. And then even to make things, hilarious, we're so early in 2021 and there's already been like chaos because of all of this. And it seems the one thing that was going to bring Republicans and Democrats together is Robinhood basically, pulling one over on their customers, or people said that they're going to protect. I know AOC tweeted something saying this is ridiculous, on top of the class action lawsuit that was filed, not in her jurisdiction, but basically she was saying this is ridiculous. And basically Ted Cruz just says, I agree. And I think that's hilarious that this is finally the thing to pull both parties together. But I mean, Ben and I talked about Bitcoin on our episodes 6 and 7. I just think this goes to show that's one of the better trades. This is not financial advice, but I know I was furious at what happened. And I think having a decentralized finance or a decentralized commodity or decentralized asset, whatever you want to classify Bitcoin as, I think is the best bet. I mean, this is just me. I know Ben and I are both very bullish on it, but it's showing that the markets are manipulated. Like, if it wasn't obvious today, like this last week, it's obvious this week. It's very obvious. They manipulate the metals markets and everything. It's crazy. It's insane.
I think the key takeaway is not, I think Bitcoin, I mean, obviously I'm a huge bull and I'm going to disclose that on Bitcoin. And like, I firmly believe in the value of it as a store of value and something that so Bitcoin is as valuable as you have ownership of it. So it's fundamentally important for you to take custody of your Bitcoin. If you are investing, you need to have it in a wallet, because it's so easy to just assume the status quo when you look at the markets. You hope that when you put in a buy order in your brokerage, that you're going to own that the next day. Yeah. But I just went onto Robinhood today to try and sell some of my cryptocurrency that I bought years ago. I can't even buy it. I can't even sell it. Chris, this is something I was fuming about, and that's why I was getting so stressed out streaming. I was trying to sell off just a small portion of my Bitcoin to make sure it would go through. That amount of money is gone. I'm going to need to file like a claim with Robinhood, because the amount of Bitcoin that I sold doesn't exist in my account as Bitcoin, nor is it in my cash balance as cash. So
they actually have two. I know I saw this a couple weeks ago. The cryptocurrency is held in a separate cash balance. I know this went through.
But it when I refresh the app, my Litecoin's there and then it's not, and then my Bitcoin's there and then it's not.
Oh man, does it show the trade at least?
Only when I go into it.
Okay. Yeah. No, but I mean, and also some people are even saying a lot of times Robinhood maybe didn't even have the funds to cover it. That's why they were capping it. But I think there's a lot more sketchy dealings that went behind the scenes. Levon, I think you're asking about Dogecoin. So my take on that is, when we were buying stocks and we're forcing hedge funds to cover their shorts, that's the retail investors screwing the hedge funds, which I think is hilarious and awesome. It's basically like us one-upping them, and then now they're crying on CNBC and like Fox Business and all these different channels that like, this is dangerous, people are going to lose money. Yeah, the only ones that lost money are you guys. Like, we're not mad. And they're like, oh, well, once all the hedge funds are squeezed out, like then you guys are fighting against each other. I kind of see Dogecoin as that, because if all the retail investors go into it, hedge funds don't have Dogecoin, or if they do, it's very minuscule amounts. So then that becomes like us against each other, where I don't really see that. It's probably going to go up. I mean, Wall Street Bets is pumping it. I think Dave Portnoy was talking about it. A bunch of different people are talking. Like, I think even Elon Musk made the joke that he was the CEO of Dogecoin a while back, and like people are joking about it. But I see that more as like investing. Short-term investing is a zero-sum game. even long-term investing. But you think if you buy a stock now and you wait 40 years and you sell it, you're essentially like trading hands with someone else that's coming in 40 years later. But if you're doing more day trading or swing trading that's quick, it's a zero-sum game. So if I'm shorting a company and Ben's long on a company, my money's going from me to Ben through brokerage firms or whatever. But I really see with people going into Dogecoin, I think that's going to be more detrimental, and that's going to be the pain that a lot of the people who are complaining about they see happening, basically.
Yeah, I'm gonna switch gears a little bit. I think what I'm wondering, and Chris, I want to get your thoughts on this. So I'm wondering what sort of the end result of this situation will be. Like we've seen a handful of stocks. Obviously, GameStop was the key target initially, and now it's moving along. I think it's sort of a performative statement against Wall Street that they're able to take out just exorbitant amounts of margin, aka debt, to sell things that don't exist to investors at investors' expense.
Yeah.
I'm wondering if this will have a positive end result in the form of short trades being restricted. I don't know what the end result is, but what I'm most fearful of, and I'm just going to give my little bit, is that what this showed is that when retail investors had the opportunity to make a statement and make real money by deploying capital in a trade and underwrite a stock and own it however the hell they want to own the stock, with real capital and owning real stock that exists in the market, not 138% of float shares, the brokerages, the hedge funds, institutional investors, and the media, aka the financial media, with probably stake in this game on the other side of the trade, totally flip the script and turn the lights off on retail investors. All you could do was sell. So their statement in Robinhood, TD Ameritrade, we are trying to protect our clients from volatile and unprecedented markets. We're not going to let you potentially ride out this trade and maybe not sit on a 97% loss, what have you. We're not going to let you buy back more to dollar cost average, whatever, own the stock at what you see at its prices, because that's what a free market is. The price of a stock is not what it's worth, but what its perceived value is. They turned it off. All you could do is sell. Like Chris said, they ensured that there was one gate and that was down. And I'm just wondering, what are the results? Like, what comes out of this? I want to see more power given back to the people. I mean, maybe we'll have the opportunity because it seems like Robinhood is going to allow trading of GameStop tomorrow, probably due to the class action lawsuit. I'm just wondering what precedent changes from here, because we're playing with fake money. We've got the dollar printing happening exorbitantly. And then not only are we printing out dollars at the wazoo from the Fed level, we're also borrowing money to sell to people with assets that don't exist. I don't know what happens from here. It just feels like a recursive feedback loop that is going to cripple.
It's ridiculous. It's the hedge funds and big banks and Wall Street are like, oh, sorry, you'll never get ahead because you don't have the capital or the leverage or the knowledge or the connections. Well, literally the internet proved. Who would have thought Reddit would prove with Robinhood? We basically had the way of communicating through Reddit. We had the way to get on with no commission fees or anything like that through Robinhood. And then we had basically, our own money at risk going against Wall Street. Who would have thought, literally, I saw an article, it was like David bullying Goliath, and I thought that was hilarious. But, just when we get a win, it just goes to show they want to change the rules. They want to change the rules of the game to benefit them because, not only are they embarrassed and they have egg on their face, it's like, oh, now it's our chance to change the rules to benefit us. And then they're going to flip it and by saying, oh, we're protecting you. I want to give two shout outs to two more prominent figures than both Ben and I. Charles Payne on Fox Business. Basically, he was going to the defense of the retail investor, and he was battling his colleagues. Literally, he was like, how dare you guys say that, like, we're there to protect them? If this was the reverse, if we were shorting GameStop and the hedge fund came in and bought up all the shares, they would have said, oh, that's too bad. You're in debt. You have to go bankrupt. You're insolvent. You have to put a lien against your house. You have to sell your car. They wouldn't give two shits. This literally happened, and now I'm gonna have to make this episode explicit because I just cursed. But I'm just
You can
furious.
edit it out. It's fine.
No, yeah, I'll probably edit it out. I'll figure it out. I'm just pissed. And then the other one is Chamath Palpalitia. I forget his name, but he's basically a venture capitalist. He's actually running for governor of California. He's a minority owner in the Golden State Warriors. But even though he's a venture capitalist, he has a ton of money. He was one of the initial engineers at Facebook.
Yep.
He even says he regrets working at Facebook to make them the way that they are today, which is interesting. But he went up on CNBC, and the one guy was saying, this is dangerous. People are going to get hurt. People are going to lose their money. And he's like, are you kidding me? Like, they know what the risk is because you weren't going to help. You didn't help them in 2008. They know, like, what they're doing. They know if they lose money, that's on them. Like, they're not stupid. People know these things. And then the one guy, the anchor, I forget his name, was
Scott.
saying, like, well, oh yeah, Scott
Wapner, right?
Wapner. Yeah, he was like, oh no, they're thinking this is a casino. They're thinking it is. It might as well be a casino because the hedge funds and big banks have the one up. And this was the one time we actually won and figured out a loophole, and now it's risky. It's just completely ridiculous. I also give Chamath credit because he actually did make money on the GameStop trade.
He made $500,000.
Yeah, he made $500,000. The dude's a billionaire, so it really doesn't make any matter. But I know he donated all of that $500,000 to the Barstool Fund for Small Businesses. So I give him props for one, standing up for the retail investor, and two, for donating his money. I'd love to see him as the governor of California. That's not political. I don't know if he's going to run Democrat, Republican. I could really give two shits what party he's for. I think even though he's a billionaire and people are like, well, you know, we're much closer. We don't have as much money as him. You know, he's really for them in the backdoor dealings. You can think whatever you want, but I see the two times that he's been at bat, he's both batted for the retail investors with defending us in media, on social media and all that. And then also with, you know, showing and donating his money back to the cause for small businesses who have been most hurt during this pandemic. I know many of the people that have died, and that's horrible. But, you know, in terms of from a business or economic standpoint, small businesses have been crushed by the thousands. It's ridiculous because big banks and companies get bailed out and they don't.
I completely agree with you. I mean, I watched that video. I think is it Chamath? I don't know if I pronounced his name right.
Probably Chamath. Yeah, I love him. Follow him on Twitter too. He's fantastic
awesome.
on Twitter.
He's brilliant. I think that's the sort of level set right here, is that it's not necessarily like, I think some people are skewing this towards rich versus poor. We should be taxing the rich. But really what the argument is folks who are in favor of censorship and are in favor of manipulating free and open markets. To your point, is that Tom? I think that's Tom. I am absolutely against Google deleting the 100,000 one-star review for Robinhood.
Tom, I was going to bring that up as well. Thank you for
and the reason being is, one, you've got two people in this little chat right now who have experienced service interruptions on Robinhood. You put forth capital into this app, and
that's my money, by the way. You know, whether I got it from a stimulus check or my own hard-earned dollars that I get from working, and then they're allocating or they're restricting my capital, that's freaking ridiculous.
I think that's the point.
Ridiculous.
Yeah, I think that's the point, Chris. It's not just like the mechanics of how shorts work, blah blah blah, the risk. The point is that the goal should be that shorts have a risk of losing infinite money. That's how it works. When you take out a call option, you have the risk of losing 100% of your money. Those trades, let them play, because that's how a free and open market works. There's not an infinite amount of money. So when you get called on your margin call, much like I would if I were to take out a short position, I would have to upfront 50% of the trade to my brokerage in order to put out that short. When the stock goes up 50%, I have to go put in more money. That's called a margin call. There can't be, like Chris said, where you're in the middle of a soccer game and the ref says, well, now there's touchdowns. You don't score goals in soccer anymore. You score touchdowns.
Yeah, so every goal is worth, 6 points instead of 1.
But if the blue team gets a touchdown, that's only 1 point because the ref doesn't like the blue team. That's what's happening, is the rules are being changed mid-game. And what the Redditors were proving is that they were playing by the rules. The point is that there's no shady dealings going on Reddit. They executed their trade. Sure, it's risky, but that doesn't matter. Whether it's a casino or not, CNBC is like, oh, that's not what the stock's worth. Get out of town. Netflix PE ratio is 1,200.
Aside from loving Tesla, Tesla's over 1,000 for the price to earnings ratio. It's going to take 1,000 years to equate for the earnings to make up for that price. Think about it. It's 1,000 years. But when the Federal Reserve is printing money, like it's going out of style, and that's another thing too. Yeah, so when everyone's saying like they're printing money, it's not helping, the layman. It's not helping retail investors. It's not helping small business. The reason that the Federal Reserve printing is a horrible thing is because it has to go through one place first. Aside from sending the checks to people, which they did do, after, mind you, they bailed out their buddies on Wall Street, big banks, big public companies. They saw the money first, and then they gave you the crumbs. That's the ridiculous part of it, too. So not only did they devalue your money and that all these hedge funds, big banks, whatever, they got to make all the good purchases first. It's like, you didn't get the sloppy seconds, you got the sloppy tenths. That's literally like lucky. They get to make all the purchases in the world they want. Oh, it takes a while. It took months. It took, how long did it take us to get the $600 checks or the $1,200 checks? We got them in April or May. Yeah, big banks and big hedge funds, they got their money first. Don't get me wrong. They got their money first, and that's by design. I mean, hell, I didn't even get the latest $600 check that I'm still owed. And, all those checks went out. And then we're going to get a new bailout with the bill with whatever Biden decides to end up approving. And then, who's going to go first? Big banks. And public
overnight
companies.
Lending rates. You betcha.
Exactly. Yeah, like we're not going to be the first ones to get them. What if I told you there's like 10 great deals. There's only 10 great deals. They're all going to get them now. So yeah, you can get whatever the hundreds or thousands of deals are left. They're not good deals, but you can get them. They're fine. You can catch up. It's ridiculous. I'll end my rant there.
No, it's only you and me and our friends in the chat. So we're basically just ranting. I think one takeaway that I want to get into before I diverge into some more of my spiel about how I hate Wall Street right now and the censorship in all of these big tech firms. They need to step the F out. Apple is restricting reviews. Google's restricting and deleting reviews. That's ridiculous to me. So here's the one key takeaway that I think if nothing else, I hope that folks around the world, I know that this is a United States issue. If you're going to talk about an exchange, whatever, this is a global issue. That the point is the stock market, despite what politicians like to say, the stock market is not the economy. We may be getting record numbers here and there, but we have 11 million Americans that are unemployed. Our U.S. debt to GDP is 130%. And the Warren Buffett ratio, which I really love to look at, that's the current market cap, aka the current value of all businesses in the United States compared to GDP, which basically means how much things we're creating, goods, services, sales. That's 188%. When Warren Buffett kind of coined that phrase, 70% was what he was looking for.
Yeah, he considers 70% undervalued. At 100%, it's fairly valued, and anything above that is overvalued. So 180% when 70 is a good deal, that's ridiculous. And there was also another saying, when the tide goes out, we're going to see who's swimming naked. And this is going to be exactly all over 2008's crisis, when the Occupy Wall Street movement happened and when all these big hedge funds were taking out ridiculous loans against houses and, they're borrowing exorbitant amount of money and leveraging their hedge funds or their banks or their companies. They're going to be the ones that are they're going to go crying to the Federal Reserve and they're going to say, we got screwed. We didn't know that retail investors could do this, whatever the cause is. Maybe there's a second wave of COVID. I hope not, or third wave or fourth wave, whatever it is, a different strand. But if that ends up happening, they're going to go crying to the Federal Reserve and say, we need to get bailed out. We're too big to fail. We employ 100,000 people. Yeah, you employ 100,000 people, and I don't fault the 100,000 employees. They're probably just there collecting paycheck, whatever. But the people at the top of your firm, they shouldn't just get a slap on the wrist, which they literally just pay out through their company. That should come out of their personal bank account. They should be the ones in trouble for it. And not only in trouble for it, they should go to jail. They should go to jail for it. Literally. It's ridiculous. They're gambling with other people's money.
And there's just the regulating a lack of regulation. People just don't have custody of their funds. Like, as soon as you put money into these brokerages right now, what you've done is, if you've forfeited custody of your own capital. I think that's the precedent that's so scary. And Tom, your point about Treasury Secretary Yellen, who received $800,000 from Citadel in 2020. Yeah, that's the scary thing. I mean, congressmen and women can legally insider trade. I don't know if you've ever read any of the research on that. Maybe we put that in the show notes.
Yeah,
but that's
definitely
legal.
Yeah, it's
You
because when they're evaluating the
Congress.
companies and they're regulating them, they can't be they can't have insider trading because they're looking at their books, which we don't have access to. But because of that, they can make trades off that. I find it really convenient that, you know, we're making a push towards electronic vehicles. But months before that announcement was made, Nancy Pelosi took out 30 long call option contracts on Tesla Motors. How convenient that all of a sudden now of the United States fleet is going to be changed to electric vehicles. And you guessed it, Tesla is currently the biggest electric vehicle and probably the only company that has the capacity to spin out a ton of electric autonomous vehicles. They don't have to be autonomous, but that's what they're pushing for. So
they will be.
They will be. It's just quite convenient that this all falls in their lap. It's just ridiculous.
Yeah, I think what's unfortunate is that I think people are rallying behind the excitement of this trade, and there is something to be said about the optimism that is warranted for the ability for people to make such a powerful and profound statement in financial markets. I mean, this is just one forum against one group of people. There's obviously so many problems in not just this country, but globally. There is something to be said about the power of the people in this situation. What I think I would advise towards patience in this process is that this is not going to be an easy process. I think to Tom's point,
it's not going to be quick either, unfortunately.
The most powerful, it won't be. The most powerful lobbyists and the folks who have an incentive structure for the people to not win have a lot of influence, as we've seen. And the influence can be deployed at the snap of a finger, in which the largest companies in the world, Google, Apple, can censor the voices of people, and reviews are a way to do that. Those are real things. If people feel so strongly to make 1-star reviews, you damn well better be able to do it. Otherwise, you shouldn't have a 1 to 5-star option. I don't know where we go from here. I think that what's really powerful is that this has attracted the attention of millions, if not billions, of people to have a closer eye on markets and to question the system. I think that's what I'm really excited about, is for folks. And Chris, that's why we exist, you and me. I love teaching people about financial markets, because like, it's so complicated and it's so rigged in favor of the people who are in the system to keep effing winning.
Imagine I was long on GameStop long before that. I looked at the company, I thought it was a good bet, and then all of a sudden a gigantic hedge fund comes in and shorts the stock into oblivion, forcing the price to go down. And I don't have enough capital. I'm going up, you know, I got a few $100, $1,000, whatever it is. I'm going up against a billionaire that can short the stock because I don't have the resources. You know, like I said, time, money, you know, leverage, whatever you want to call it. It's just ridiculous. I mean,
It is. I'm going to go back on my soapbox for a minute.
Go ahead.
What I'm seeking from this at the end for an end result is I'm seeking market accessibility. The market, the investment vehicles that have existed forever, the shorting, the calls, the options, the trading, those systems should either be more distinctly defined where the lines are drawn, or they shouldn't exist. Because if you being a brokerage or the SEC has to change the rules when someone is losing on a fair trade, something's wrong there. And you can't just change the rules without folks having the opportunity to make decisions around it. The legislation has to be public. The decisions have to be not rushed in favor of one direction. The point was that the buy button was removed. So I think there's a really powerful statement against like something that's a meme on Wall Street Bets, that stonks only go up. I don't know if it's coincidence or if it's intentional, but they deleted the buy button, so stonks couldn't go up. And the people who went long in the position can only lose because of these brokerages manipulating the market. So what I'm hoping for is folks to continue to question these authority figures and to educate yourself on what the risks are, and not just to trust that it will work out, because when you need your money most, these people are damn well going to make sure that you don't get to get it.
Yeah. And full disclosure, Ben and I have said it multiple times. We're very long on Bitcoin. If you want any resources to learn about it, and part of the reason we're so long on Bitcoin is I buy Bitcoin on Swan Bitcoin or Kraken Bitcoin, or Ben buys it on Cash App. I all
I'm
recommend
Swan too.
those. Swan as well. Swan, you can dollar cost average in. You can actually do one-time payments as well. But basically, the reason that I see it as such a great asset is because I buy it and then I self-custody. I take hold of it myself. Yeah, there's a lot of risk to that in the sense that, you know, if I accidentally send it to the wrong address, it could be lost forever. It's literally a currency that, you know, it's code, but if you send it to the wrong place, if I misplace it, if I can't get into my device, it's gone forever. But I'd rather take that bet on myself and that risk myself than be locked out of my trade. I know I brought up on the last one of the last episodes, Russell Okun, football player, offensive tackle. We brought it up on Jimmy's episode that'll be coming out shortly. He basically a story about him. He's from Nigeria, I believe, and he was over there visiting his family. He's from there. And he brought money over, and basically he did not have enough money cash with him to help out, you know. So he called his bank. He even called them before his trip, like, hey, I'm gonna be in Nigeria. I'm gonna need access to my credit card, to my bank, whatever. The bank actually told Russell Okun, oh, you're in Nigeria? He's like, yeah, I told you that. They're like, yeah, you can't take your money. We're not gonna wire you money. And he's like, what do you mean you're not gonna wire me money? And he's like, it's in my account. Like, it's not like he was taking out a loan. He's a football player. He had millions of dollars, not in his account, but probably hundreds of thousands in his account. And they're like, oh yeah, like Nigeria is considered like a country that is, you know, not, or I forget if he said at war with the United States, or we just don't do business with them. So he's like, yeah, but it's my money. And then they're like, yeah, I'm sorry, we're not going to be able to wire you money. And then in that moment, he realized, this was going back 3 years ago, that when he really got big into Bitcoin, that he realized that it wasn't his money. It's the bank's money. And they're caught, like, you know, they're nice enough to let it to you. So then that's when he started going really long into Bitcoin, buying Bitcoin. There's a lot to learn about it. I spend literally hours a night on Clubhouse, which is a new app, which is basically just like a conference room, like it's basically like a Zoom call without video, and it's just like you're just talking. But a lot of people that are really big into Bitcoin, and I just learned a lot about it. I continue to keep learning about it, and the more that I learn, the more that I want to buy about it. Full disclosure, I have a bunch of it, but I think it's a great way because at the end of the day, no one can tell me what I can do with my Bitcoin. I can send it to Ben, I can send it to someone else, and I really see the power of that being able to, you know, cut out the banks and cut out the hedge funds and cut out all these companies. They're not going to like it, and it's going to be very painful to go that way. And, you know, I understand people are like the government can restrict it and say it's illegal. If it's illegal, the great thing about Bitcoin is it can disappear in the sense of like, you know, oh, I forgot my password, or the running joke or the meme on Twitter is, oh, I lost it in a boating accident. I don't know where my Bitcoin is. So it's very hard for them to get custody of it, barring they torture you and you tell them how to get into your Bitcoin. But yeah, that's the long and short of it. But yeah.
Yeah. I'm going to add on to one more thing about Bitcoin is, I think there's definitely an air of like, people will say that it's speculative, it's risky. I mean, there's risk with every asset that you want to invest in, but I think what the key takeaway that I got from that, Chris, is that the power dynamic with Bitcoin is flipping it on its head, where you have to beg and plead to your bank to get the money that you earned. Whereas Bitcoin, you take self-custody of your asset. It's a store of value in an asset that's scarce. And it's not that hard. It's not that far off from the way that we currently operate the financial system. Your credit card is not US dollars. You can't just go into the ATM. I mean, you can go into the ATM, but you're going to get like a 20% fee. But your credit card is not paper money. Your paycheck likely is also not rubber banded dollar bills. The financial system is largely digitized. We're not that far off from that. The difference is that the denominator with which dollars are valued, aka Bitcoin, that's fixed at 21 million. The issue is that with the US dollar and the Fed printing, I know we regurgitate the Fed printing all the time, but you don't know what something's worth. You don't know if your money is now lesser value or if it's gone up what you have is you have a ruler, but you don't know if you're measuring your table or if you're measuring the ruler, because the system is always changing. And I think
it's changing in their favor, of course.
it is. And the people who get to set the rules obviously get the benefits. So I think we shouldn't disclose financial advice, but my advice is to do some research on Bitcoin. And if you understand the thesis and feel strongly enough, I put $50 in it. I think just to on a hedge that it does take off and goes to $1 million, and that the US dollar doesn't exist, which I think we're on the precipice of something happening very soon. That's my hot take.
and people were saying, oh, invest in the stock market. It's a lot less risky. It's a lot less volatile. We literally just saw GameStop go up 4,000%. So yeah, when Bitcoin makes a correction of upwards or 20 or 30%, that looks like chump changing compared to what can happen in the markets. And let me tell you, with the GameStop was the retail investors beating hedge funds. I think hedge funds are going to be they're out for blood. I mean, they're already trying to change the rules and they're going to win at the end, they think, or they hope. But yeah, I mean, they're going to try and do all different crazy things to inflate it, or, whether Bitcoin starts going up, they're going to try and suppress the price. They're going to try and sell you fake Bitcoin. I can already see it happening. It happened in the financial markets. They try and push bonds that give you negative returns. Yeah, you get paid every month, but they're printing so much money, it's not keeping up with the amount of money they're printing. So it's, the same old game. The more you study history, the more you study the markets, the more you start to pick up on patterns. And I'm not saying patterns of buy this or buy that. That does come with it, but it comes up with people are always trying to take your money one way or the other. And, you will have to do what's best in different asset classes, diversity. They always say that's to protect against people doing funky things in different markets. But yeah, basically just do your own research. I know Ben and I, you can reach out to us on any of our platforms. You can text me, you can call me.
Literally anytime. Yeah.
I'm up till 2 a.m. most nights. I don't sleep enough. I know. I go to bed at 2. I wake up at 8. It's a cycle. It is what it is. But yeah, thank you guys so much for joining us. We had upwards of, I think, 9 people in the chat.
9 people in and out at the very least. Guys, thank you. Guys and gals, thank you so much for being here. I'm so excited just to be in this
Thanks,
project.
Tom. I'll try.
I'm excited to be a part of this project with Chris. And I think what's really exciting is maybe we will get to out Wall Street. My friend Colin wanted me to say that. So Colin, if you're on, that's for you to say that statement.
I'd love for the amateur investors to be the ones that have a ton of money, that have helped people make a ton of money. And then, are we really amateurs once we get to the end years from now?
Dude, I don't know. I mean, we're going to start the wrap up process, but everyone, thank you so much for being here tonight. We're going to continue to do more research. This was a really spur of the moment decision that we made this morning, essentially. So thank you for listening to us ramble and rant. We're going to continue to do research, but hit us up with any questions. I think that's what I love most is doing research and getting learned up on things that I don't know about, because I barely understood short selling until today.
Yeah.
So thank you so much, everyone.
So it's a pleasure having you guys. We actually do have another Bitcoin episode. One of Ben's friends, Jimmy, will be on our episode on Wednesday. I'm going to try and get this episode out either tomorrow or Saturday. And then we actually have part 2 of a Bitcoin episode the following Wednesday. So you get 2 more Bitcoin episodes. We're recording another episode on Saturday with a guest. We'll leave that as a surprise. But thanks, guys, for coming out. Thanks for joining our Twitch call. And I'll put this out on Spotify shortly and all our other podcast platforms.
Thanks,
See you later,
everyone.
guys. Thanks.
Bye.